Hello and welcome back to another video. In today's video I'm going to be sharing with you how I managed to take advantage of this GU trade and yield a total of 2.6%. Now, first things first, let's actually review our analysis on the dollar index. Start off with our monthly time frame. So as you can see, the dollar index on our monthly candle is actually trading into our monthly discount fair value gap. Now, why was I actually anticipating some sort of retracement? You can see in the previous week, we actually had this huge candle to the downside, creating lots of inefficient price action, where more likely than not, we are going to see some sort of retracement back into it when we're tapping in, such significant levels of liquidity, such as our monthly fair value gap. So once you've actually had the anticipation that more likely than not, market participants are going to trade price back into our monthly fair value gap, about highlighting, making sure that this back into our daily fair value gap is going to be high probability trade, and very predictable to actually take advantage of in the first place. So, as you can see, traded into our monthly fair value gap. We had our range of consolidation center here, and then we actually managed to sweep our significant level, our previous weekly low at the time. Then from here, we've shown intent to put prices higher. Then from here, this is where probability comes into play. More likely than not, market participants are going to continue to put prices higher. So you can see reaction from our optimal trade entry. You can see our clear reaction to the upside, and then obviously going into our day-to-day where we managed to take advantage of final push into a daily fair value gap. Now, many people have actually been anticipating shorts today. The reason why longs were extremely valid, high probable, and very predictable is down to understanding your overall profile. So if it's going to be a high and very volatile, large expansion to the downside, okay, we're going to need some sort of significant retracement to the upside, actually mitigating some of our most significant levels, such as our daily fair value gap. So you can see today, instead of actually sweeping some of our sell side liquidity before we move up, we actually went straight up. Now this is actually understanding your intraday profiles. Okay, what's happening on a weekly level? You can see more likely than not today we're going to be some sort of manipulation to the upside. So with understanding that and actually knowing that in the first place, this is how you know, okay, that more likely than not, price is actually going to engineer its lows for the latter half of the week. So you shouldn't actually let, first things first, Monday put you off trading. And, if you understand your profile, you shouldn't let, the engineering of liquidity actually put you off a trade in the first place if you're trading some sort of manipulation in the overall opposite direction of your, weekly intended overall bias, in this case, downside. So because I'm actually anticipating our weekly candle to close bearish, I'm going to be anticipating some sort of bullish manipulation to the upside, which is what we managed to take advantage of today. Now, dropping down the time frames, you can see at our Asian trading session, where we can see our range of consolidation, where prices actually been engineered. Switch C, an intraday level, we've actually managed to sweep this. Now, from this point onwards, this is where you're going to be having to wait, for our clear displacement to the upside, in the overall direction of our daily bias. You can see came into fruition once we actually entered our start of our New York Open. Now from here, this is where you can actually anticipate more likely than not our low of the day for the dollar index is going to be in. So you can look to get in line, with a high probability GU or EU trade. So taking a quick look at the trade itself and the execution, you can see in our previous week, swept our buy side liquidity, and obviously today I was anticipating some sort of manipulation to the downside, so more likely than not the daily candle is going to trade to the downside. Before this move on an intraday level, we want to see some sort of manipulation to the upside in the opposing direction of our daily bias. That's exactly what we've got. See price trade into our OTE, from our previous week's candle. And dropping down the time frame, you can actually see as soon as we get our news driver at 9:30, this is where we start to see our displacement. So as soon as you start to see, our intraday parameters such as our 30-minute fair value gaps actually become disrespected, this is where we can anticipate, that high of the day for GU is going to be in. So you can market execute here, place your stop loss just above, with some obviously breathing room of where market participants are, not likely going to push price above, and to where if price actually does then trade back above, it actually invalidates your overall daily bias and weekly to some extent, where you can then obviously update and potentially change your outlook for the week. Now, as you can see, price actually didn't manage to reach way to our daily fair value gap, so we may actually see our low of the week be created tomorrow. The continuation of the selected day, trade down, then see some sort of continuation of our overall trend for GU. Now, going on to the take profit as well. See, I took profit here. Important, to take profit as soon as the dollar index actually hits this level, this daily significant level, and when the daily candle and sessions actually come to a close, and time obviously strict predictability and probability as it comes closer to for the day. So I hope this video did help, and thank you very much if you did make it this far.